Just a quick follow-up video on NASDAQ. Yo, guys, I have to take out my head for NASDAQ and just give up salute to NASDAQ. We had a massive move to the downside yesterday, which some of us were taken out, myself included. I was taken out in this movement. Look at what market did. It actually moved about 300 pips to the downside. Wow, this was just a crazy, sorry for that. This was just a crazy move to the downside. Okay, why did market move this way? Before I go there, I'm just going to explain how I lost this trade. Why did I take this trade? Here's the thing, we're looking at this level as our this was like our range zone. This was where market was ranging, so we're waiting for market to break out of this range before we can take a trade. Practically, we were looking at an uptrend because we overall went on an uptrend. So even myself personally, I was looking at actually my battery is low, so I'm going to charge. I was looking at an uptrend. I was looking to buy in this market. So I knew that usually NASDAQ around 3-4 o'clock, it likes to do like an aggressive move to the downside before continuing to the upside. So in this case, I was like waiting for that move to just happen. So practically, if I'm saying this is the range for us, so this was what I was expecting. I was expecting market to just drop to this point level here. From there, I was expecting market to shoot up. Then I was in here on a buy around 15,100. Market showed me flames, came to this level, touched here, shoot to the downside. That's how I lost this trade. But if we can just go back a bit and just explain why did market go back. I think I was also I think I was misinformed here, or maybe I missed some critical information in this trade. If I say this is a range, if I tell you now this is the range, then what I mean is that since this is the range, if market come out of this range, then market will move to that direction. Eventually market came out of the range from this point here. That is why market dropped. So practical, I guess I'm the one who was in the wrong in this case. I was the one who was in the wrong in this case because it did exactly that. So again, if we look at this level as our resistance level, this is our resistance level. We've been to this level before. We touched here, we did not break. We touched here, we did not break. And also yesterday we touched, we could not break. That is why we saw market dropping further to the downside. So we look at this market, this level as our critical resistant range level. So that is why we had the drop. Now we are going up. Why did we drop up to this far? Because let me just go back to the 4-hour time frame and show you. I want to put on a Fibonacci retracement and show you how does Fibonacci works. The overall movement of the market is still up. We are still on an uptrend, guys. Let's not get confused. We are still on an uptrend. What Fibonacci does, it shows you pullbacks level. Okay, where is my Fibonacci? My Fibonacci should be somewhere here. Yeah, the Fibonacci retracement. So how you draw your Fibonacci retracement, you place your zero to where the movement started. Remember, I said it's a movement up, so the movement up started here. I'm just gonna drag it. I'm gonna drag my 100. This is my 100, as you can see on the side. My 100 is up there, and then I will have my zero down here. Let me just it's not really accurate, but it's there. You can see it's almost okay. So I hope this is clear. You can see where the movement down started. The movement down started around this point here. This is where the movement down started. Then this is where the movement ended, the movement higher. So practically market started moving higher from here. This was an uptrend from here. So this we take as a pullback up to here. If you take a look at this level here, this level is what? This level is 50% pullback of the overall movement. Let me just pause quickly. Okay, so as you can see, market pulled back up to the 50% level. This is the 50% level. If market pulls back more than 50% of the overall move, then it's no longer a pullback. It's now a it's now a reversal. That is how we define it. So it touched the 50%, then it continued up. So we are looking for market to continue up until this key resistance level, which is the highest point that market had formed. From there we'll study the price action. If it breaks above, let me just go back to the smaller time frame. Let me delete the Fibonacci now so that I explain what we might anticipate the market to do. Sorry about that, and let me just delete it. So what we can anticipate market to do is this, simple like this. Go back to the 1 hour time frame. Like I said, we anticipating market from this point to continue higher up until the key level. Scenario number one, we might get to the key level, reject as we did here, then we can drop back, maybe come up to this point, make a double bottom of this point, then maybe continue higher. Then scenario number three, we might come to this level, we might come to the key resistant level, touch the level, maybe break out. If a breakout is going to happen, and then we'll have a breakout, then we'll also have a retest of the level before we continue higher, meaning we don't really have to rush to buy into the breakout. If we get a breakout around this level, which is 15,150, we'll just have to wait for the market to break. Probably might break and go as high as 15,200 maybe, or even less, I don't know. Then eventually we're going to have a retest of this level, of this key resistance level. Then from there, that is when we'll have the stronger move to the upside. So that is our trading plan if market comes to break above that level. But from there, I would like to just stay away and just see the price action as it moves for the week. So yeah, all the best for the week. Don't forget to subscribe to my channel so that I keep posting more and more and more of this content.